And it's that time to get updates from the world of business. What's happening in the world of business from the world in Africa? This is Business Incorporated, and here's what we have for you on the program today. Well, cooking gas marketers in Nigeria are blaming terminal operators for price surge. A bit of relief in Egypt as the Egyptian pound recovers, and that's because there's been ease on the credit card rules. Yet another destruction of drug in South Africa. The details will come to you later on Business Incorporated. Good afternoon once again. I'm Ini John Mekwan. This is Business Incorporated. 25 minutes of updates from the world of business is what you have in the next couple of minutes. Let's start from the markets now. Starting from Nigeria, I must have a smile on my face because intraday we see that the NGX recovered 0.20%. Been closing down for yesterday at least, and South Africa is also up 0.14%. The EGX of Egypt is also up 0.56%, while Kenya closed down. We've seen some drop in that market now. We see that normally we would have 100 index points right here. Unfortunately, it went from 100 to 90, and now it's 89.59. Closed yesterday 0.26% for first day. Very unfortunately, we hope to have an analyst join us to tell us perhaps what's driving that Kenya market, the Nairobi Stock Exchange. We have Hisbon Moses joins us from Nairobi. He's accountant manager at the Nairobi Securities Exchange. Hi, Hisbon. Good afternoon. Thank you for your time.
Hello, hi, how are you? I'm very fine. Thank you for asking.
Awesome. So we see that the Nairobi Stock Exchange has been dropping. I mean, just 100 index points. We celebrated that. Then we see it drop to 90. Now is at 89. What are some of the drivers of the market in recent times?
Thanks a lot. I think what is driving the markets currently, we've seen a lot of outflow of money moving towards the fixed income markets. The government has been raising the interest rates here for quite some time. So a lot of money has been moving from the equity side towards the fixed income side. And also the depreciation of the Kenya shilling has also affected our markets a little bit. And also we've seen a lot of outflows moving towards the developed markets.
Yeah, obviously the issue of interest rates is not just in Nairobi, neither is it just in Nigeria. It's a common one. Now, are you saying that at this time that the fixed income market is booming to the detriment of the stock exchange?
Yes, that is what we can see. So I think we've been seeing the government coming to the capital markets just to borrow some money because of budgetary support. So, and because the interest rates have been moving higher, a lot of money has been moving that direction as well.
So give us a little bit of details about the sectors and some of the companies, that are affected the most in this drive outside the stock exchange.
Good. So we've seen a lot of outflow from the banking sector being affected very heavily. Then also we've seen the telecommunication sector being affected heavily, remembering that one of the biggest companies here in Kenya, which is Safaricom, is the company that has a lot of trading that happens at the stock exchange here. So when there is no activity in that particular counter, so you'll find that the turnovers become very, very low. So the banking sector and the telecommunication sector has been heavily affected.
Would you say a majority of investors in your stock exchange are locals, or do you have foreigners participating mainly?
So here we have a lot of foreigners coming into this market, but we've seen also a lot of locals coming in to support the different stocks during the current environment. So we are seeing local investors coming in heavily as well, trying to support the prices of the stocks.
So what do you see? Do you see a recovery at the NSE? I mean, 89 is quite low for a stock exchange.
So for me, I think I'm very optimistic. I think this is the right time for investors to come in and buy some of these stocks, because we can see there has been a mismatch between the fundamentals of some of these companies and also looking at how the prices are moving. So you'll notice that some of the prices have been moving downwards, while the companies themselves have been making more profits. So that tells you that there's a negative correlation between the fundamentals and the prices. So that tells you that this is the best time for you to come and look for opportunities here in Kenya and invest.
Yeah, but how are we sure it will recover?
Positive.
How are we sure it will recover? If you say investors should come, how are we sure it will not just keep going downwards? Are there anything to boost the confidence of investors? Is the government saying or doing anything? We know market moves on news.
So one thing you'll notice is that we have a very conducive environment from the government side, and then the government has been supporting the capital markets heavily. So you'll notice that the government has promised to privatize some of the biggest companies here, just signaling that the equities market might be setting up for the rise in the near future.
All right, thank you so much. We certainly wish that the markets will recover and attract the investors that it deserves. He's Bon Moses, account manager at Nairobi Securities Exchange.
Thank you a lot. And also, just as I sign off, it's important for us to notice that we can be able to access most of the data on this market and on the TradingView website, and you can be able to see your charts there. You can be able to see market information coming in, market news. So we can just all investors who are looking to come into this market, they can look for more information on TradingView.com.
All right, thank you so much, Bon Moses.
Thank you.
All right, we're still staying in the market, but now it's the money market. Egypt's currency is threatened from a record low against the US dollar on the back of a market or the central bank easing rules on the use of credit cards abroad. The pound was changing hands at between 43 and 44 per dollar on the parallel markets on Thursday versus the 48 the previous day, according to a number of traders. That rate is still significantly weaker than the official one of 30.9, underscoring Egypt's dire shortage of foreign currency. There had been a rush to hoard foreign exchange after the central bank last week started requiring customers to provide proof of travel before departure to use credit cards in other countries. Now, the regulator revised that directive on Thursday, and users only need to notify the bank's customer service department and show evidence within 90 days of returning from the trip. An announcement that eased worries that yet stiffer restrictions were to come. A number of traders said they were pausing operations on Thursday and waiting until the end of the day to assess the situation as they struggle to find dollar buyers. The pound traded at about 42 on the parallel market a week ago. Egypt has devalued the pound 3 times since the early last year, leading to a loss of almost half of its value. Authorities say it's shifting to a more flexible exchange rate, but delays in fully implementing that has held up the review of a crucial $3 billion International Monetary Fund rescue program. Derivatives traders are hedging against the prospect of further currency devaluation to the pound, a 12-month contract in the non-deliverable forwards market that has weakened almost 9% since mid-September, reaching 45.4 against the dollar on Thursday. Still on currencies now, Kenya Power has reported a net loss of 3.19 billion shillings for the full year ended June 2023. This is a reversal of the 3.26 billion shillings net profit it made during the same period in 2022. The utility firm cited higher finance costs caused by depreciating shilling as a reason for the loss. 89% jump in financing costs to 24 billion shillings from 12.7 billion shillings hurt its bottom line, despite a 12% rise in operating profit to 19.2 billion. Despite the loss, Kenya Power's operating profit grew by 12% from 17.15 billion posted the previous year to 19.21 billion. Kenya Power has reported net losses only two other occasions in the last 3 years. Let's go over to Europe now. A major supplier of wind turbines and power plants in Europe is in financial trouble. Yeah, you won't believe it. Siemens Energy is in talks with the German government for help. Well, let's get the details of this. Cassandra Son joins us now with the details. Hi, Cassandra. This is not good news at all, but what kind of trouble is Siemens into?
Thanks for having me, Ini. Well, the situation at hand stems from the Siemens Energy spin-off a few years ago. That's when the gas and power division of Siemens became its own company. The company says because it's smaller and technically newer, it doesn't have the same credit strength to provide performance guarantees that are sometimes required to assure customers that new orders for power plants or wind farms will actually be delivered. They're basically trying to paint this as if they are a victim of their own success. They're saying that their finances are stretched because of fast-growing orders for the equipment needed for the rapid expansion of new electrical systems, especially as many countries look to replace fossil fuel-based systems. So what Siemens Energy is asking for are financial guarantees from the German government to help it continue to build large projects. And I do want to put this in perspective for a moment. In principle, guarantees are not uncommon for expensive and long-term projects. The idea is that they secure advance payments made by customers or against default risks. But normally, those are done through banks. But here, Siemens Energy is saying that even as the company asks for government guarantees, they have 110 billion euros worth of orders on the books. But a large backlog can require a large guarantee volume. And according to German media, the guarantees could amount to 15 billion euros.
Wow, that's a lot. But what does this mean for the immediate future of Siemens?
So these talks have been going on for weeks, and Siemens Energy has said that, quote, for the time being, it's not entering into any new contracts for certain land-based wind turbines, and that it would be strictly selective to sales of its offshore turbines. The company has said net losses and cash outflows would be greater than expected in the upcoming fiscal years, and that it could lose around 4.5 billion euros for the fiscal year that just ended at the end of last month. Now, financial results are expected in a few weeks, by the way, so we will know more by then. But when we step back and look at the wind sector in Europe, Siemens Energy is a key player. They are a world leader in offshore turbines, for example. And the European Commission this week has recently outlined that more wind power is needed. Member states saw 16 gigawatts of wind power installations added in 2022. And while that is a record, it's less than half of what the EU needs per year to achieve its 2030 target.
So I wonder what their stocks are doing in the markets with all of this.
Well, Siemens Energy stock took a big plunge after this news that they were seeking a financial guarantee from the German government was revealed. Shares dove by 39% at one point on the German DAX, erasing an estimated 3 billion euros worth of value. At the end of trading, there was a slight recovery, with shares finishing down 35.5%. But more broadly, Europe's stock markets opened stable today. The Frankfurt DAX was nudged down 0.1%. The Paris CAC 40 was flat, and the London FTSE 100 index was down 0.1% as well.
Yeah, 39%, a huge one, right? I hope that they get a recovery. Thank you so much, Cassandra. All right, let's take a break now. When we come back, we do have stories from the African continent. So stay with us. This is Business Incorporated. Welcome back. Still watching Business Incorporated right here on Channels Television. The Nigerian Association of Liquefied Petroleum Gas Marketers is blaming terminal operators for instability in the price of cooking gas in the country. The President Association of Petroleum Gas Marketers, Mr. Oladapo Olatubosun, who was on Business Morning earlier today, believes that 90% of gas generated in the country are produced locally. Mr. Olatubosun was a guest on our program earlier.
80% of gas we use in this country is supplied locally. Nobody pay dollar for the purchase. Energy does not collect dollar for the purchase. No government agency collect dollar for the service. Everything could be in terms of that, but you pay in naira. So we are not totally subjected to fluctuation. This is different from AGO and PMS markets, because officially those items we are not producing in this country. But this particular product, we are producing it in this country, and in large quantity, more than whatever we are saying we are importing. It will be very unfair to say now everything must be priced as if it's being imported. Then why the effort of government? Why approving blending? Why approving waiving of tax? In fact, why approving domestication of products? So we need to appear and beg. These are our big brothers, the big investor in industry. They have contributed a lot, but we all have a role to protect and defend this industry. Because when the industry collapses, we will be the first victim. It will also spread over to them. We have extended our advocacy to the all ministries. We've written even to the terminal owners. We've written to them. We've written to them. We've written to, we were at the Senate. All what we are doing is for intervention, mediation, so that we can come to that table. If they also have some other challenges, it can be identified. We've done that in the past. My association and a lot of them fought for the removal of VAT. We fought for approval of blending. We fought for the changing in price template. If they also have an issue, even when vessels are being delayed, we were on the front line that vessels should be given priority. And it's happening today. Vessels move to Port Harcourt, it comes to Lagos without any hitch, free flow. Nigerians should benefit from all these benefits.
But still staying in Nigeria now, cashew producers and traders, the association, National Cashew Association of Nigeria, they're worried about premature harvest and foreigners operating at the farm gate. They had a meeting in Lagos, a national consultative meeting, where they dissected some of these issues and others that have been militating the boosting of production in the association.
Looking at the production is one of our major production, because we have not been able to work on the production through the federal government angle to see that what the new inputs for the sector are reorganized. What we currently have as sector, we believe that there is a need for research to give us a new kind of variety that will produce more than what we are currently earning. In 1 hectare of land today in Nigeria, we're talking about 300 to 400 kg, while our counterparts in other countries are already harvesting over a ton in 1 hectare of land. So we think that there is need for research in the sector. By this development, we can increase production, increase the quality of our cashew output in Nigeria, thereby making it acceptable internationally and earn us more financial foreign earnings.
We move to South Africa now, where the South African Police Service recently destroyed drugs valued 800 million rands in Johannesburg. And this is the third destruction process in this financial year. And the most recent destruction was in Cape Town in September, where 1.7 tons of the value of 170 million rands were destroyed. SARS reported that in the 2022-2023 fiscal year, 20.8 tons of drugs with a street value of 20 billion rands were destroyed in the 2022-2023 financial year. Still in South Africa now, the South African Revenue Service, SARS, has apologized to taxpayers after sending a bulk SMS reminder for them to file what was flagged as threatening. Hundreds of taxpayers took to social media this week to complain about the message, which warned them about possible criminal action if they failed to file on time. Part of the SMS sent to taxpayers on Tuesday read, "Kindly submit your returns within 10 days of receiving this SMS. Should you fail to submit the returns, we will initiate a criminal process and send you a notice of intention to summons." But it's important to say that their SMS line has been suspended until further notice. A bit of good news now. Burn Manufacturing, the world's leading clean cook stove manufacturer, distributor, and carbon offset project developer, has announced the issuance of Sub-Saharan Africa's first ever green bond designated for clean cooking financing of $10 million. The proceeds from the bond will allow Burn to increase existing manufacturing capacity in Kenya, as well as launching a new manufacturing facility in Lagos, Nigeria. Production will increase from the current 400,000 units per month to 600,000 units and will produce a range of life-saving biomass, electric and LPG stoves. The stoves have consistently been proven to provide substantial health, financial, and climate action benefits. The funds from the Green Bond are poised to extend these benefits to an extra 2 million households in the year 2024. The proceeds from the bond will allow Bern to increase existing manufacturing capacity in Kenya and also head to Lagos, Nigeria. We see that that's another competition for the gas marketers, which is what we saw the president of the association saying. I mean, if you have clean energy or clean fire, I would say, from stoves like this, then perhaps some other people may look away from gas if it becomes too expensive for use. So there you have it. They may soon Bern manufacturing may soon be heading to Lagos, Nigeria, where the population and the consumer purchasing power seems to be. All right, now moving on to other stories. Now, Rwanda Air has announced that it got a Boeing 737 aircraft on October the 25th as the national carrier continues to expand its air service capacity, including routes. The development brings the national airline Boeing 737 aircraft fleet to 7. Boeing 737 aircraft are manufactured by Boeing, an American plane firm. Meanwhile, Rwanda Air has other aircraft, namely 2 CPJ-900NG, 2 Bombarders Q400NG, all in dual class configuration, and new triple class Airbus A330. Now, the airline flies to more than 20 cities in Western, Central, Eastern, and Southern Africa, the Middle East, Asia, Europe, and other parts of Africa. And then the International Monetary Fund team has concluded the third review of Benin's economic program under the Extended Fund EFF, an Extended Credit Facility ECF arrangement, and a new program supported by the Resilience and Sustainability Facility RSF. The IMF reached a staff-level agreement with Benin on a new program under the Resilience and Sustainability Fund and on policies to complete the third review of Benin's 42-month blended EFF-ECF. The RSF seeks to support the authorities' ambitious climate agenda, thereby complementing the EFF and ECF in enhancing socio-economic resilience. The staff-level agreement is subject to IMF management and executive board approval. The EFF-ECF review's completion would allow the disbursement of SDR 101.59 million. That's about $134 million, or 82% of Benin's quota. Benin faces headwinds from the Niger border closure amidst regional sanctions on the country and post-electoral policy shifts in Nigeria. Economic activity is now expected to expand by 5.6% this year, and that's down from 6% earlier, reflecting ongoing shocks. And this outlook is actually subjected to downside risks. Well, let's close in Benin, Cotonou today and continue next week. Do have a great weekend. I'm Ini John Mekwa.